Welcome to part 3 of chapter 9. In this segment, we're going to be looking at travel expenses, which are again one of those mixed motives. Travel expenses are different from transportation because they actually include meals, lodging, and other incidentals because you're away from home overnight. IRS generally looks at the away from home test and whether or not the taxpayer would need to stop for sleep or rest. That's normally if you're away from home 10 hours or more. That would normally be that you should be stopping for sleep or rest. Now, in terms of being away from home, you actually have to have a home, right? And most of us know where our home is, so this may seem rather obvious to you. But we're actually not looking at your home. We're actually looking at your tax home, and that's not always actually where you reside. A tax home is actually considered to be where the taxpayer is typically employed, the area in which they're employed, and hence then they should have a home nearby. So if you're employed in downtown Houston, you should have a house in Houston would be the thought, or one of the suburbs that surrounds Houston, somewhere in that general Houston metro area. If you don't, maybe you decide you want to live in Austin. The cost of going from Austin to Houston then is your own expense. That's commuting. So you're not away from home overnight in that circumstance. So again, we're looking at the tax home. Now, also keep in mind this idea of the temporary. If you have something that's lasting 1 year or less, you have an assignment for 1 year or less, then you could be away from home. So for instance, maybe you actually reside in Houston and your employer has asked you to work in Austin for 6 months or so. Maybe they're short-staffed or something of that nature. Well, you wouldn't necessarily sell your house in Houston and try to relocate in Austin for a short term. Again, I had 6 months in my example. So this idea of temporary is, yeah, you would be away from home. You're going to get an apartment or something in Austin and work there for 6 months. So that would be away from home. That would satisfy our test. In order for travel expenses to actually be deductible, the taxpayer has to be pursuing business while they're traveling or trying to generate some sort of income, so they're on some income producing activities. So to the extent your employer sends you to a location, let's say they send you to Chicago, that would be in pursuit of your business, right? So that would, or their business, your employer's business. To the extent while you're in Chicago, you decide you're going to do some sightseeing, personal, or maybe you decide you're going to bring some family members with you. You don't want to go there alone. The cost of the family would not be deductible, nor would the sightseeing. So it's just while you're there in business and the business expenses incurred while conducting business. Now, with respect to the deduction for travel expenses, we make a distinction on whether the taxpayer is traveling domestically or foreign. And that distinction actually affects the transportation costs, nothing else really. So the transportation would typically be your car, or in many instances it's airfare. And you can, if it's domestic within the United States, as that nice map indicates, you would be entitled to a full deduction as long as the trip was primarily for business. So maybe you fly up to someplace and you only spend 1 hour on business each day, but that was the point of the trip, and whoever you were conducting business with didn't really want to spend any more time. You could, and you spent the rest of your time maybe, sightseeing or doing something like that. You couldn't deduct any of the costs directly related to the sightseeing, but you would still be able to argue that the trip was primarily for business because your client demanded that you be there for 1 hour of every day for maybe a week or so. Okay, so what I'm trying to get at is it's not really a time test, how many hours per day or things of that nature. It's just it has to be primarily for business. And again, we emphasize this the point that personal side trips don't count. Now, meals, lodging, incidentals are going to be for the business day. So if you're on a trip maybe for 5 business days, and you also decide you're going to tag on a weekend, then you had, you're away maybe for 7 days total. The weekend days were your meals and lodging. Those, of course, would not be deductible. It's the business days that we would be focusing on for meals, lodging, so those you can allocate per day. Foreign travel is a little stricter with respect to transportation costs, and generally foreign travel is going to be airfare. The cost would be fully deductible if you can satisfy one of these tasks. Sometimes that's easy to do if you're an employee, not so necessarily as easy if you're self-employed. But let's kind of look at the test. The first one is the foreign travel does not exceed 1 week. That's a pretty short trip. If you're going outside the United States, it normally takes like a day just between getting to the airport, going through security, getting your flight, if you have to make any connections, things like that. So now we're basically saying that that's a really short trip. We do exclude the day of departure because we realize how long it takes, but the day of return is included, and it takes just as long as to come back as to leave, sometimes longer depending which time zone you're flying into. So the first test is it's a really short trip. Foreign travel then would be fully deductible if it's a really short trip. More common is the second test that would be used, and here we're basically going to look to see that the business days are more than 75% of the total number of days on the trip. So if you have a 10-day trip, which again is relatively short for foreign, we would look to say that 7.5% of those days, 7.5 of those days, 75%. So we're looking for more than that. So 8 days would have to be business days, something of that nature. Now we're going to count the day of departure and return as business days, incidentally. So that kind of helps as well. And C, with respect to taxpayers, no substantial control. This would never apply if you're talking about someone who's self-employed, so they would always have substantial control. On the other hand, this is a really nice one because employees often don't have substantial control over arranging the trip. So it's easy then to argue that your employee was sent there for business. They had no substantial control over arranging the trip, and then you don't have to concern yourself with how long the trip is or the number of business days and things of that nature. The last one is that the personal vacation is not a consideration. That one's not exactly clearly well defined in the court system when something is personal vacation. But assuming you go someplace, you're self-employed and you pick a destination that happens to be really a resort location, and maybe you like it and you take your family, that's going to suggest it's a personal vacation, that business wasn't the primary objective. Now, I've already mentioned that business days do include a day of departure and return, which is really nice, since if you're going foreign, it does typically consume quite a bit of time. It'll also include weekends and holidays that fall between business days. So let's assume you're in a location. I distinctly recall this occurring to me. I was in India, and we had some business days, Monday and Tuesday, and then they had this holiday on Wednesday. Which was kind of a nice break in the middle of the week, but it was a holiday in India. And then we came back to work on Thursday and Friday. So the situation here would be, well, it doesn't make any sense to fly back from India to the U.S. on Wednesday. You wouldn't get there anyway and been back. So to the extent that you have weekends and holidays and you've got business on every other side, you're good, just like the weekends here. We were actually there for a couple of weeks. The weekend would also be considered business because you're not going to fly back just for a weekend. So as long as you have business on all sides, just kind of keep that in mind. You have to have business straddling these, or on like bookends on the different the holidays or the weekends, and any day that requires the taxpayer's presence. And this gets back again to the, if you're only there for 1 hour, but that's necessary, then that would be a business day. Now, with respect to transportation costs that don't satisfy those tasks, let's assume that you actually have maybe 60% of the days that are for business, and that's the test you're relying on is number B. Then you would get a 60% deduction of your airfare if you spent $4,000 for your airfare, because foreign airfare can be rather expensive, particularly if you're flying business class. So then you would be entitled to 60% of that would be your deduction. Okay, so just kind of keep that in mind. If you're flying coach, it's probably less. Okay, we're going to allocate those costs between the business and personal days, and you would be allowed the deduction for the business days. And obviously the meals, lodging, and other incidentals, we would know that there were 60 days, and we would just take that. Those can be allocated specifically to each day. So it's not like airfare where you have to do this proration. With respect to water travel, some people don't fly. That's a little odd nowadays, but some people actually would prefer to travel by a cruise. Not really a very effective way to get there. The deduction is limited to twice the highest per diem allowed to a federal employee. Federal employees are not allowed very much, as you can see. Cruise ships are generally quite expensive if you're really going luxury class. Now, granted, if you're down at the waterline, not quite so expensive. But deduction is going to be limited for those who would travel by water. Pretty uncommon that someone would do this for business, but nonetheless, we do see this limit. Now, in terms of attending conventions and seminars, there's been a lot of abuse in this area, and so we've got some relatively strict rules for someone who's attending a convention or seminar. First of all, it has to be directly related to your trade or business. All right, so it's not even income producing that we're concerned about. It has to be trade or business. So if you're an investment manager, and you're going to an investment seminar, then that makes perfect sense. If you're a dentist and you're going to investment managers, that doesn't really make much sense. So it has to be directly related to the trade or the business. Then we're also concerned about the area in which this is being held. If it's held outside the North American area, and you can see what the North American area is, it does include Mexico and the Caribbean and Canada, then it has to be as reasonable to hold it there as to hold it in the North American area. So if we have a conference over here in London, and it's an international conference, then that might make sense because international, you have people from all over the world that can get to London. It's a huge airport. On the other hand, if we're an American group, American Association of Accountants or something of that nature, right, wouldn't it make sense to hold the conference in the United States, North America? So you have to have this reasonableness if you're going to go outside the North American area. And with respect to cruise ships, this is almost comical. The ship has to be registered in the U.S. and sail only between U.S. ports, which in fact, the only cruise ships I'm aware of that sail only between U.S. ports are those in Hawaii. And even so, they're still not registered in the United States. So this one you really don't even have to worry about. You're almost never going to see it. All right, we've got an example, a problem here that's going to walk us through some of these rules. So I have Melissa, who recently paid $400 round-trip airfare to San Francisco to attend a business conference for 3 days. She also paid the following expenses. She's got a registration fee, and she's got some lodging, some meals, and also she's got a cab fare. So we're going to be asked a few things about Melissa. What amount of travel costs can she deduct as business expenses? Okay, now we're assuming that business was the primary purpose of her trip. So her airfare now, this is domestic, right? She was just going to San Francisco. So that's fully deductible if this is a business trip, primarily business. Conference registration also would be deductible. She was there for 3 nights for business. As a result, she would get the lodging. 50% is going to apply to her meals. Now, we're assuming that she's a self-employed individual, right? If she's an employer, self-employed. If she's an employer, then this 50% would apply to her, and she would be reimbursed for the full amount of her cost. And then the employer would have the 50% limitation imposed on their deduction. And of course the cab fare as well. So her total deduction then is the $1,800 if the trip is primarily for business. Suppose that while she's on the coast, she also spends 2 days sightseeing and seeing the national parks. There's some really nice parks over there in the San Francisco area. To do the sightseeing, she paid $1,000 for transportation and lodging and some other things. Now, with respect to the sightseeing, she's not going to get any deduction, right? That's personal. So even though she incurred these costs, it's not going to help her at all. She's going to end up essentially with the same calculation as before, the $1,800, just the business portion of her trip. The tag on here to see the Yosemite and some of the national parks is not going to be deductible. Okay, now suppose that she made the trip primarily to visit the national parks and that she just wanted to attend the business conference as an incidental thing. If that's the case, she's going to have substantially reduced because we can't allow the airfare, right? She went there for the vacationing in the parks. And so she would still get the direct cost related to the conference. You can see that right here, but the airfare is going to be kicked out and she would only have $1,400 now. Suppose that she actually resides in San Francisco and she attends a conference and she pays the registration fee and she also drives 100 miles going back and forth. She also has some conference parking and she buys some breakfast and dinner for the days that she's at the conference. She bought them on the way and she brought dinner on the way home from the conference. So she didn't actually eat the breakfast or the dinner while she was at the conference. That's an important point. We're really going to limit her deduction. That works out. She's got her registration, she's got the mileage, and she's got her parking. But notice we're not going to allow the meals or any of the other incidentals that she may have incurred. Okay, so $395. All right, now we move into Kimberly. Kimberly's self-employed, which kind of helps clarify some things here. She recently spent $1,000 for airfare to travel to Italy. What amount may she deduct? First of all, the trip is entirely personal. That doesn't take a lot of brain power to figure out she's not going to get a deduction with that. Now, she spent 8 days on personal activities and 2 days on business. So it's going to be hard to argue that this was primarily for business. Just too many personal days and just this little tag on with respect to the business. So no deduction again. Now she spends 7 days on business and 3 days. So she's got 10 days total, and 70% of her time is now, the 7 days is spent on the business. Okay, so we're going to allow her then a deduction of 70% of her airfare. Okay. Now her trip is entirely for business, which is really what we want, because now she'll be entitled to deduct the full amount of her airfare. Again, this is foreign travel. One of our last points here is with respect to substantiation. When you're incurring any expenses, particularly travel expenses, you have to maintain adequate records. We already know you have to have adequate records. That's to support any items of gross income deductions and other items on your tax return. However, if you're traveling, you really do have to maintain very, very good substantiation with respect to who you were meeting that was a business purpose, what was that, how long were you in the meetings and things of that nature. So fairly good record keeping here. Again, if you're an employee, typically your employer is going to bear that burden. Okay, that finishes up this segment of Chapter 9, so thanks for listening.